Hi, thanks so much for tuning in. And this is BQ Prime, and this is an earnings chat with Anand Rathi Wealth. We're joined by the man himself, Anand Rathi, as well as Feroze Azeez, who's the Deputy Chief Executive Officer of the company. Gentlemen, thank you so much for taking the time.
Thank you.
I will start by talking about the quarter gone by. You, I think, did better than your expectations in the first half of the year. That seems to have continued in the third quarter in what many have described as a challenging environment. Not very challenging for you, seemingly. What are the drivers of the growth in the third quarter?
Yes, Alex, I think, as you rightly put it, our results are better than what the target we had given. And the reason is simple. I think the main credit goes to our strategy and the philosophy of the wealth management, where we are very uncomplicated, design for people. And obviously, this has given results, which what we had targeted for the client. So satisfied customers and clients always, are happy to come back. And therefore, there have been continuous inflow of money, much greater than what we had earlier years. So these are the main reasons for which I think the performance is good.
Okay. I want to break that down a little bit, Feroze, if you can help me out. In the past, you've talked about, or rather, at the end of the second quarter, you spoke about increased wallet share, increased, contribution from new clients being the primary drivers, considering that the market didn't really give you much. Has that panned out in the third quarter as well?
Yes, Alex, since the uncertain environment which the global is infusing into the capital markets of our country as well, the wallet share has increased on the back of uncertainty, because what actually practically happens if we all introspect, if I'm wealth owner, when times are bad is when I give more attention to it. When the times are good, everything is hunky-dory, people are just letting it breathe, they're not consolidating with the best guy. So their desire to consolidate with the best advisor goes up dramatically, because the relative difference becomes more apparent to naked eye. That's point one. Point two, in all those conversations which HNIs have with their own HNI friends, when bad stories are being narrated, they automatically get driven to recommend them to us. So that's why you see a 94% increase in the net mobilization. New money is coming in is a reasonable testimony to how we've managed the money. And they also refer us more clients. That's why you have seen a 19% growth in the number of families. And also, which is not numerically apparent in the result press release, is the fact that the quality of client acquisition has also gone up by 80%. So if one was to start last year by 100 rupees, the same new clients today are starting with 180 rupees. So that, I think, quality of references have gone up. People's trust in us has gone up, because we are also listed now. There's a certain degree of credibility which comes with the transparency listing brings. The number of them have gone up, quality has gone up, and the penetration has gone up too. And I think the reinvestments of MLDs have also seen very, very heartening numbers of 80+%. So these are a few reasons why those numbers exist. So 25, 20, the implied growth in this business, like we have always mentioned, for long periods, decades, is 25%. In bad times, it generally is higher.
Okay. Taking that point forward, you've described what happened in the third quarter, and we've more or less decoded what has happened in the first 9 months. 43 crore of PAT in the third quarter, up 35%. That takes the PAT in the first 9 months to 126 crore rupees. Your guidance for the full year is 155 to 160 crore rupees. And in past conversations, Feroze, you've said that the second half has traditionally been better for you. In the most conservative estimates, one would say that you're going to clearly beat the estimates that you have set for yourself. Is it time to raise the guidance now, Anand sir?
Yes, you are very right. I think this is very obvious. And we are going to revise our guidance to 165 crores from 155. And hopefully we expect to beat that too. But I think, being conservative as we are by nature, as you have seen in performance, I think we are planning to revise the guidance from 155 to 165 crores.
Okay. The other metric, and Feroze, you've spoken about the 4 legs of growth on this program as well, or on our platform as well. One of the legs, of course, is capacity, and the number of relationship managers that you have. You've also mentioned that there is scope for them to manage more, so not necessarily a requirement to dramatically increase the capacity. But what about the geographical spread? I'm wondering whether there is merit to broadening the scope, and how much can you grow if you do that?
Yes, Alex, such a valid question. And that's what we've been planning for the last 4 5 years. See, if you look at geographical spread very organically, you'll have to plan a little ahead. So, what's been our strategy is to not take people generally from metros alone. When it comes to private banking, there's a mindset that convent school educated, English speaking, golf playing, that mindset we broke, and we hired people from tier 2, tier 3 cities over the last 8 10 years. Now in our top 100 RMs, you have about 27 28 who come from reasonably smaller B towns, where they can go back and set up their own businesses in terms of units. That's why you see we had 11 units. Now we also have 4 5 small units like in Coimbatore, Nasik, Ahmedabad, Nagpur. So as we speak, there are 27 28 people who can go back to different B towns to become heads of those small businesses and then grow it. To protect the culture and the client centricity, it's very important that somebody has been a part of our system before they go and in an isolated location and start a unit. So that's been our strategy, and that's what we wish to pan out over the next 2 3 years as a Bharat capture strategy and move from India to Bharat seamlessly without diluting our client proposition.
I'm actually curious about this because, on an aside, if you talk about luxury consumption, which perhaps is a metric of the prevalence of HNI families, even in places like Visakhapatnam, places like Raipur, or smaller towns and cities, there are plenty of them. So, what is the current share that you have of the families that you manage that are outside of metro cities, and what is the kind of share of wallet that they're giving you?
So, Alex, you actually incidentally mentioned a city where we have a unit, Visakhapatnam, which I forgot to mention. But having said which, see, when you're not present in a location, it might not be a right indication of what proportions are currently there.
Sure.
If I'm looking at opening a unit today, this business, if it has to be built brick by brick, because it's a business of trust and credibility, initially you're going to be doing a lot of conversation, and then numbers would do the talking. So the proportions would be not so much, sub 3 4 5% from these smaller 4 5 towns. But if you're present there for 8 10 years, then is when it balloons. It has an inflection point, and that's happened to our 11 12 older locations, and we have to plant the seed and then wait for it to grow.
One more question on the
And
operational
just to
front.
add, Alex,
Yeah,
I think
please.
what Feroze said, we allow our relationship managers to bring business from anywhere. There's no territorial restrictions on them. So
Right.
normally, before we open an office somewhere, our RMs try to get business from those towns. Okay, so there's already some existing business coming from those towns, and that makes us easier for us to then create independent business unit there.
Yeah, it's a very valid and very interesting point, sir. Just one more point on the operational front in terms of the expanding share of wallet, which you've pointed out in the past, penetration. You mentioned that new clients are higher quality clients that you're adding. What is the expectation in terms of, and you also pointed out in the past about the vintage of your relationship managers over a period of time, they build more credibility and they get a higher share. So one would assume that as the vintage grows, the tailwinds are significant in terms of profit generation for your company. Is that going to be something that you can see in the near term, or will you have to wait for that to pan out?
Alex, it's vintage square, a vintage of client, vintage of RM. Now, let me take this moment to probably highlight that we've had zero regret attrition in a quarter. In a wealth management business, having zero attrition is a good thing. As long as you don't have leaking bucket, then vintage pans out with 2 dimensions, and you have a power of compounding to that. So now coming to vintage of RMs, it's progressing very well because you're not having a leaking bucket. And in our belief, the inflection point of an RM's life where you have exponential growth is about 3.5 4 years. Have we attained that? The answer is yes, reasonably. If you look at 3 to 5 years, 5-year plus, we have 125, which is 42% of the RMs have finished 5 years and have not moved elsewhere. That's one. And there's another 60, 70 of them who have finished 3 to 5 years. So a reasonable portion of our front line is going to be 5-year plus. And that, I think, being a little more generous, so 5-year plus is an immense inflection point.
Yes.
Then you have your client attritions, which are negligible. If that happens, then a 5-year plus client has a wallet share of 4 times more than a new client. So as you have more thousands of clients moving into the 5-year plus bucket, and if you make the product of these two, you will be able to extrapolate what kind of assets under management we can get to, even if you don't add one new client.
Yeah, so I'm hoping that the extrapolation will be done by you, and Mr. Rathi can give me some idea. There are certainly, and you said that you will be getting profit. A profit will be much higher than you previously anticipated.
Yeah.
The year ahead also then has much more potential, perhaps, that you thought at the start of this financial year. What is the expectation? And I'm sure your shareholders would like to know as well.
I think obviously, we have not given a formal guidance on that, but normally our expectation is that we should grow anywhere between 20 to 25%. That's our sort of minimum expectation which we have planned. But as time goes, maybe by the time we finish the year, we'll definitely able to give a guidance for the next year as well.
Fair enough. Yeah, it's too early to ask that. But gentlemen, I think it's been an absolute pleasure speaking with you. Thank you so much for joining in, and wish you all the best for the rest of the year.
Thank you.
Likewise. It was wonderful talking to you.
Thank you, sir.
Thank you.